Hello and welcome to another update video about ETH. So ETH is moving in its structure. There's no change to the previously communicated scenario here that we are likely still in this wave 2 correction. The wave 2 likely started with the top that was formed on the 9th of December, which I see as a wave 1 price top. Then I'm talking about an A wave to the downside in the primary scenario, a B wave to the upside, and the C wave to the downside. It just did drop too much for anything else. So the C wave is likely unfolding now. The white count for now remains the primary scenario. I've got a yellow one on here, which just allows for one more low. I just show the different subdivisions here. I mean, I could also show you a count that we've already bottomed, but you know, there's no point doing that until resistance basically breaks, okay? So how could we have already bottomed? I mean, cryptos like to form WXY structures, even though I have to say they were more common in 2020, 2021. They don't seem to be so common in this cycle. So I've been watching early last year, a lot for WXY structures, but they don't show up anymore so much. So it's more like a typical ABC thing, which is now forming. So I'm primarily watching still for lower prices in a C wave, which is a 5-wave move, okay? So if this was a WXY pattern, so wave W down, wave X to the upside, and the Y wave could simply be a 3-wave move. It can bottom at any time, yeah? But that is not predictable because the WXY is basically an incomplete correction that basically needs another low. Okay, so therefore I give you resistance. So if the resistance area breaks, we have a first indication that a low has formed. First line of resistance is at $2,267. Then we've got 2,330 and 2,382. These are the important levels of resistance for a pullback, you know, and any pullback really, the price should remain below this resistance, or shouldn't say pullback, corrective rally. In any corrective rally, the price should stay below that resistance area in order to keep the downside pressure high. A break above the resistance area would suggest that some kind of a low has formed. Okay, so we need to look at the C wave then, and let's zoom into the C wave, which is basically the last wave in this wave 2 correction, but that doesn't mean it's complete yet because a C wave, as I already mentioned, should be a 5-wave move. I can see a wave 1, I can see a wave 2, I can see potentially a 3rd wave. It definitely reached key levels. It's long enough to be a 3rd wave. So I am watching for a potential 4th wave to start, and then one more low could drive it lower, possibly to around 2018 here. That is the first time where really from a, let's say, probabilities point of view, a low could form, and we could then watch for a first impulse to the upside. However, there's a different way of counting the micro, which is also likely, and this is the yellow subdivision, which would allow for 2 more lows. Okay, so 1, 2. We could basically still be in the 3rd wave, and this drop down is a third of a 3rd wave. Yeah, 1, 2, 3. We could now see a smaller 4, then a 5. Only there, possibly around 2018, we would complete circle wave 3, and then we could still see another 4 and another 5. So essentially, I don't know, I can only highlight that after the next low, it might be that the low is in, but for anybody who wants confirmation, you need to wait then for a first impulse to the upside that forms, and a first impulse that's large enough to be relevant and that breaks ideally above initial resistance. Some people might choose to layer in positions then when we get to that low. Different strategies how to trade that. But for me, it's 1 more low or 2 more lows based on what I can see right now. The yellow count is certainly also probable given the increase in downside momentum, which typically indicates a third of a 3rd wave breakdown, okay, which would rather suggest the yellow count. But they are both relevant. I'm fairly neutral between them, I would say. But in both scenarios, I would say we haven't seen the low yet, and I would still watch for lower prices as long as the price is below 2,382 and does not sustain above that level. Have to add though that I also mentioned in the last video that this here might be a head and shoulders pattern. So the right shoulder ideally doesn't even break above the resistance, or doesn't sustain above it at least. And then we could see 1 or 2 more lows below that, okay, into the support area, which is still relevant overall. Maybe I should also add for info the 23.6 fib level. Where's that? 2001.57. Okay, so it's just that we could see some support there. So I'm just adding it to the chart. A wave 2 should ideally go lower, but then again, because we've seen that massive B wave, the C wave doesn't need to go much lower, okay? It has to do with the situation that an A wave and a C wave, they adhere to certain Fibonacci relationships, and the C wave normally, well, it's already, from a C wave point of view, it's done what it needs to do, but obviously structurally, from an extension point of view, it's done what it needs to do, but structurally, I think 1 or 2 more lows are missing. So yeah, I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.